A very good evening, everyone. Welcome back to another Patron Live sharing class. It is my honor to be able to host everyone here. As a gentle reminder to everyone, please remember to apply the knowledge you learn in my class and put it into practice. Continuous learning and practice will definitely improve your trading skills, which will eventually lead to more profitable trades. Our ultimate goal here is financial freedom, so let's work hard together to achieve it. We all here to learn something new and advance our portfolio. So today, we will continue on the same topic, which is support and resistance. As I mentioned on my previous class, that there are a lot of contents related to support and resistance. Therefore, I will continue to share more contents today. By sharing all these contents with everyone is something I believe is useful and important for most of our members. This technique will able to help us, everyone here, to have a clear understanding on how to read the charts, and by understanding the charts well, it will definitely help you, everyone, to earn more profits and avoid unnecessary losses. And besides sharing trading techniques, I also will scan for more profitable, high quality stocks, share market analysis, and guide everyone in all aspects of trading. So I hope that everyone can be more knowledgeable and profitable. Thank you for everyone's support. And for today's contents, we'll be covering 4 topics. Okay, these are the 4 topics, and one of the topics is a new topic called block trade. Okay, let's take a look at the market analysis. Recently, the market has indeed been as we expected, with no sustained upwards or downward movement. The strong gains from the previous trading days have taken a sudden turn today. The signs of volatility at high levels are to observe. But of course, this is within our expectations. I won't share much about this for now. Next, let's take a closer look at the specific markets. Let's take a look at Nifty Index. In the past few trading days, the Indian stock market has experienced a dramatic trend with rapid changes in directions. Let me count. The deadline on the 18th can be seen as a break of the previous upward trend. And yesterday, we saw a breakthrough of the short-term downward trend line. The significant increase of nearly 2% in the previous trading day was largely erased by today's decline. Do you feel that it is chaotic? I certainly do. Not only the market is chaotic, but my explanation is also a bit chaotic. I guess it might sound a bit chaotic to you too. Okay? However, I can clearly tell you that this type of trend of a volatile market, whether it is an increase or a decrease, there is no substantiality, and the market can change direction in the short term at any time. And this change is unpredictable. So from a technical perspective, the significant increase in the candlestick chart of the previous trading day, combined with the good performance of the overnight US stocks, theoretically should have a lead to a good increase in India's domestic stocks today. But in reality, the early jump opening already ended the increase, and the stocks fluctuate and fell throughout the day until the close. In fact, we are given a clear indication of this, and I have explicitly told everyone that there is no substantiality in the short-term market fluctuations. And we also remind everyone not to buy any common stocks for now. What I mean is not to be bearish in the Indian stock market, nor to say that the Indian stock market must follow a downward trend. Instead, it's likely to undergo a high-level volatility for the moment and is not suitable to buy common stocks for the time being. Okay, let's take a look at Sensex Index. As for Sensex Index, is not much of a difference, right? Not much of a difference between Sensex and Nifty. Today we'll continue to analyze Sensex Index from a different perspective. The analyst result for the Sensex Index is also about the same as Nifty Index. But currently, from the chart of Sensex Index, although there was a rebound in the previous trading day and a breakthrough of a short-term downward trend, we notice that the MA10 and MA20 on the daily chart are in a bearish crossover state. And there are no signs of the fast and slow line of the MACD index wanting to cross. It can be inferred that although the prices rebounded from the low level in the past 3 trading days, the short-term weakness is difficult to change. As mentioned earlier, the frequent switching of long and short direction in the near term has greatly consumed the enthusiasm of both long and short sides, making the oscillating trend more obvious. Okay? In the trend of oscillation, there is a clear feature that most analysts' method will fail. Therefore, in the near future, it is best not to insist on reaching a conclusion. The oscillating trend is a conclusion without a conclusion. Okay? Regardless of the recent market trend, it actually has no impact on our trading. Whether it is trading in the UC Nimi stocks or the IPO application for listing, we have made substantial profits. In addition, we are about to launch block trading of stocks, okay, which is a highly profitable and truly zero-risk trading model. We believe that in the future, everyone's profit will increase and the scale of our asset management in India region will also grow, which is exactly what we all hope to see. Okay, so that's all for the 2 index. Let's take a look at the micro analysts. Okay, as for micro analysts, which we all know is data and news, the current market is a state of confusion, with the index fluctuating up and down, and there is no clear direction in short-term trend. At this time, it is even more important to rely on macroeconomical data to guide the direction. At the same time, macroeconomical data or informations can only allow us to have a broader perspective on the market, especially when the market is in a stage of turbulence adjustment. We need to conduct comprehensive analysis from multiple aspects to verify and judge the market trend. Okay, let's see what I picked for everyone. Okay, India likely to keep economic growth momentum in fiscal year 2025 despite risks. Okay, according to the latest report, India is expected to achieve an economic growth of around 7% in the next fiscal year. Despite the new geopolitical risks arising from the Red Sea crisis, which may impact global inflation and economical output. In a government latest economic review on Monday, the team of Chief Economical Advisor V. Ananta Nagawal stated that India's economic growth is in the upcoming fiscal year starting from April the 1st will surpass the global economy, supported by stable domestic demands and private investments. the government stated recent events in the Red Sea may reignite concerns about global supply chain dependency, further exacerbating the slowdown in global trades in 2023. The report suggests that if the supply chain disruption persists in 2024, it could affect global trade flow, transportation costs, economic output, and inflation. And added that India is confident in resisting newly emerging disruptions. Standard & Poor's Global Rating predicts that India will remain the fastest growing major economy in the next 3 years and is expected to surpass Japan and Germany to become the world's third largest economy by 2030. The report suggests that the strength of the financial sector and recent and future structural reforms will make it highly likely for the Indian economy to grow over 7% in the coming years. We have always said that the pace of Indian economy development is astonishing and unique in the world. This lays a solid foundation for the development of the stock market. Although this is only micro-level information guiding the long-term trend of the stock market. Although there is a possibility of high-level volatility in the current Indian stock market, there is no need to worry about the long-term bullish direction. However, it is important to note that volatile trends are often the most difficult to trade. Okay, let's move on to the next news that I would like to share. Okay, this news is about India becoming the third largest economy, as I mentioned just now too. Okay, the India Ministry of Finance stated on Monday that with the continued support of reforms, India is expected to achieve a GDP of $5 trillion in the next 3 years, becoming the world's third largest economy and reaching $7 trillion by 2030. 10 years ago, India was the world's 10th largest economy with a GDP of $1.9 trillion at the current market prices. This shows the rapid pace of Indian economic development in recent years, in these 10 years. As a country with the largest population globally, India possesses a huge market size and consumption potential. With an important foundation for its economic development, the realization of the economic potential will also boost investors' confidence. Optimistic views on India's economic prospects may prompt investors to increase their investment in the India stock market, thereby driving the market higher. We also believe that India's goal of to become the third largest economy within the next 3 years is achievable. And this process will undoubtedly be accompanied by stable economic growth, leading to a continuous rise in the stock market. Therefore, friends, as we find ourselves in the midst of the India robust economic development and a super bull market in the stock market, failing to realize our financial dreams would mean missing out a great opportunity. Okay, that's all for the micro news and data. Let's take a look at the next topic. Okay, the next topic will be touching on block trades. Okay, so we currently in a more competitive phase of the asset management skill competition, which is the second part of our competition for the Asia Pacific headquarters. I've been telling everyone recently that my major profit project is about to launch. And many members and friends are very interested and have been asking what kind of profit project it is. Some friends may already have a rough idea, while some might not. So today, I am very honored to tell all of you that our next profit project is called block trading of stocks. Okay. Many friends may not be familiar with block trading. However, it does not matter. Okay, it does not matter. I will share in details with everyone in a while. Okay. Okay, regarding to block trading, I have been telling everyone that it's very important. Okay, it's a very important profit making project. Okay, block trading can be said a true risk-free trade. Okay, and can achieve stable profits. However, for ordinary investors, block trading may not be familiar. Okay, maybe they have not been through all this. Okay, in fact, it is precisely because of the limited knowledge that is profitability that high. Okay, and of course, it is currently a crucial stage for us. Okay, in the asset management skill. So engaging in block trading is the fastest way to increase our asset management skill in the India region, and it's also an important way for us to achieve higher profits. So after all this talk, okay, let's see what is really block trade. It is, okay. Okay, block trades refers to trading of large quantities of stocks in a stock market in a single transactions. Okay, in one transaction. Okay, these transactions typically involve large shareholders, institutional investors, or other investors trading in high quantities, rather than through regular individual trades. So in India, block trades are commonly referred as, we can call it bulk, okay, bulk deals or block deals. Okay, bulk deals or block deals. These types of transactions can occur in a stock of listed companies on the stock exchange. The scale of block deals may be significant enough to impact the company's stock price, hence attracting the market attentions. These transactions may be carried out by professional investors, funds managers, investment institutions, or other large investors. Okay, so in summary, bulk deals, okay, or block trades are an important trading method in the stock market, involving the buying and selling of large quantities of stocks, and there are certain impact on the market liquidity and investors' investments strategies. Okay, let me explain a bit more on that. Okay, about the advantages. Okay, I have briefly explained what is block trading. Since we say it can help us to achieve risk-free high profit faster, correct? So what is the advantage of block trading? Okay, firstly, block trading has unparalleled efficiency because it has a separate trading channel, unlike regular trading. It is different from normal trading. Okay, so it does not have a significant impact on the market price, making the trading more efficient. Okay, there are a few points. Okay, first, efficiency. Okay, second, price flexibility. Okay, flexible in price. Block trading, due to its large transaction volume, usually occurs between major shareholders, institute traders, and other traders, okay, making it price more flexible compared to trade in the open market. Okay. Next one is reduce market volatility. Typically, block trades are of a large scale, but due to their distant trading channel, they have a relatively small impact on price fluctuation compared to the overall market, ensuring market stability. Okay, the next point, which is privacy protection. Okay, block trading usually requires higher trade privacy. So, special trading structure or tools may be used to protect the identities or sensitive informations of the participants. So overall, block trading is a trading method designed specifically for handling large volume of stock transactions, typically suitable for institute investors and other large investors. This type of trading helps to achieve more efficient stock liquidity and faster trade execution. Okay? So these are the advantages of block trading. Okay. So after discussing the advantages of block trading, so what are the benefits? What does the benefit for block trading bring us, okay, to the ordinary investors? As I mentioned earlier, the advantages of the block trading. We mentioned is flexible pricing, and the benefits we can enjoy doing block trading come from this. Okay, because it's flexible pricing, we enjoy the benefits from flexible pricing. So due to flexible pricing, when actual block trading takes place, there is a certain discount, okay, certain discount rate between institutions. This discount rate can enable our block trading to truly achieve zero risk and high return. Okay, so from tomorrow, tomorrow we will conduct our first block trading, and everyone can start enjoying and experience the trading mode of zero risk and stable return. Okay, so we'll continue to our next topic, which is classical tactics. Okay, today's topic is the same as the last session that I was mentioned. Okay, but it's a continuation of more contents on how to determine the support and resistance. There are many specific details about how to determine support and resistance, but we cannot list everything out here. I will only talk about the essential based on its importance. In the last session, I already covered some of the contents, and today I will continue to share what was not finished. Okay? Why do we need to explain this part in more detail? The reason is that this part of the content is the most common in the market. Okay, happen the most. As long as we use technical analysis, we will encounter this type or this kind of problem every day. Therefore, this aspect of contents is not only the most basic, but also the most difficult to fully understand and master. Okay? Without further ado, let's jump into the contents. So, I have mentioned two methods on my previous class. So today, we'll continue with the third method for determining the support and resistance, which is trend lines. In fact, I shared a lot about trend lines in my previous discussions. So most of you, this should be easy to understand. It's okay if you already understand about this trend line. You can still review it, okay? Re-listen again in case there's some things that you do not understand. Trend lines are lines drawn by technical analyst experts to represent the past price movement of a particular trading assets. Their important purpose is to predict future price changes. Okay, so we see a straight line in a chart which is formed by connecting the highest or the lowest price point of a particular trading target during a specific period of time. The angle of the final line will indicate whether the target is an upward trend or a downward trend. Here, when I mention trading target, I mean stocks. Okay, but it's in the international market. There are not only stocks but also other trading targets. Okay, I won't talk about those for now. The meaning of the term trading targets here is that the methods we are talking about can be used not only in stock market but it also can be used in other markets. Okay, when do the trends become a form of support or resistance? This means that when the price fails to effectively break through an upward or downward sloping trend line, the trend line will act as a support or resistance. When the price reaches near it, if the trend line is broken, it indicates a change in the original trend. Okay, let's use a chart for a clearer understanding. Okay, take a look at this figure. When the low point of 1 and 2, okay, which I mark 1 and 2, rise to form a straight line, okay, it becomes an upward trend, indicating that the upward trend has formed. Subsequently, when the price approaches this trend line again, the trend line becomes a support line. Okay, so please pay attention to the point that was marked 3, 4, and 5. It is obvious that after the price approached the trend line, it rebounds upward again. Correct? So you can see from here, reach and rebound upwards. Okay, same for 4 and 5. One thing to note is that this figure is just a random case. Okay, I just pick up from a random case. After the trend line is formed, the price is supported 3 times. So, does every support of a trend line support the price for 3 times? The answer is obviously no. Okay, sometimes after an upward trend line is formed, it only supports the price for once, okay, and then lose its effect. In extreme cases, the upward line may be broken just after it is formed, okay, before providing any support. Of course, this situation is really rare and very extreme. In fact, this is a scenario of a failure of trend line as a support. Okay? Why am I trying to convey here is to make everyone understand that when learning any technical skills, it needs to be master flexibility rather than rigidity. Okay, for this chart, okay, let's take a look, which is a case of trend line failing as a support. Okay, in this chart, the position 1 and 2, okay, which I mark, a trend line was drawn. And according to the Dow theory, at this point, the high and lows of the price are both higher, which clearly meets the definition of an uptrend. After a period of time, when the prices starts to test the rising trend, this trend line fails to provide support, and soon breaks through, okay, breaks downwards. Therefore, the trend line fails as a support. Of course, this situation is relatively rare, as only shared as a case study. In reality, if we trade this stock properly, okay, based on this stock, we still can make profit out of it. Okay? Okay, let's take a look at another case of a descending trend, okay, acting as a resistance line. After connecting two high points at point 1, 2, okay, 1 and 2, in a chart to form a descending trend line, it usually becomes a resistance line. Indeed, as a price falls and rebounds near this trend line during the downward trend, the trend line becomes a resistance. Okay, become a resistance line. The price touches the resistance line and fails to break through, resulting in a sharp decline afterwards. Okay? As many friends may feel unfamiliar with drawing lines on the chart by hand, or may not know where to start. In fact, if you have time, okay, you guys should practice drawing the chart more often to become better, and you will understand how it is to draw. Okay, it's very easy to draw. Okay. Okay, next, we'll look into the fourth method. Just now I talked about the third method. Okay, now it's a fourth method of determining support and resistance, which is using a golden ratio. Okay, so what is a golden ratio? Okay, it's a mathematical term. Golden ratio, or you call it golden section, refers to dividing a whole into two parts, where the ratio of the larger part of the whole is equal to the ratio of the smaller part to the larger part. Okay, approximately about 0.618. The ratio is rightly recognized as the most aesthetically pleasing ratio. Hence, it called the golden ratio. Okay, behind this, there is a little story about it. Okay, it is said that in the ancient Greeks, one day there's this person called Pythagoras was walking down the street. Pythagoras, I believe, did anyone heard about him before? I don't think so. Okay, he is a very famous philosopher and mathematician in the ancient Greeks. As he passed by a blacksmith shop, okay, he heard the sound of the blacksmith striking the iron, which was very pleasant to his ear. So he stopped to listen. He found the rhythm of the blacksmith iron striking was very regular, and he expressed his proportion in a mathematical way. This proportion is widely recognized as the most aesthetically pleasant ratio. Okay, hence it's called the golden ratio. Of course, this is just a story. Okay, we don't have to worry about the truth of this story, because I also read about this. Okay, so the golden ratio possesses strict proportional artistry and harmony, containing rich enthusiastic value. This ratio can evolve a sense of beauty in people, and is considered the most ideal proportion in architecture and arts. Okay, painters have also discovered the design in this proportion of 0.618 to 1. Okay, result in the most beautiful paintings. For example, in Leonardo Da Vinci works such as Vitruvian, Mona Lisa, and The Last Supper. The golden ratio is used, okay? Architectures have a special fondness for the number 0.618. Whether the ancient Egypt pyramids, Cathedral in Paris, or the modern Eiffel Tower, and the Patrons in India, they all have traces of the golden ratio. Okay, we do not need to say much about this aspect. Okay, let's start with a sequence of numbers. The first 7 numbers in the sequence, okay, is 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 144, okay, and so on and so forth. Okay, the sequence of the numbers is called Fibonacci. Okay, it's called Fibonacci sequence. And this number are called Fibonacci numbers. The characteristic is that except for the 2 numbers which are number 1, okay, each number is the sum of the 2 numbers before. Meaning 1 plus 1 equals to 2, 1 plus 2 equals to 3, and so on and so forth. Okay? Okay. All in front is just an introduction about these Fibonacci numbers. Okay? So, what is the relation between Fibonacci sequence and the golden ratio? Correct. Research has found that the ratio of adjacent Fibonacci numbers gradually tends towards the golden ratio as index increases. Okay, that is, as you can see, which is over here, f bracket n minus 1 bracket slash f bracket n slash to 0.618. Okay, since Fibonacci number are all integral, the proportion of 2 integrals is a rational number. So it is just gradually approaches the irrational number of the golden ratio. When we continue to calculate larger Fibonacci numbers, we will find that the ratio of adjacent numbers is indeed very close to the golden ratio. In fact, the Fibonacci sequence is sometimes used in technical analysis in our financial markets. Okay, for example, for the analysis of time period, the Fibonacci sequence is an important factor that cannot be ignored. Okay, for this part, I will not explain for today, as it would lead to a lot of more contents. Okay, for today's, our main focus is explain the concept of support and resistance. Okay. Okay, we have talked so much about the golden ratio or golden section, and even brought up by Fibonacci sequence. So how is the golden ratio actually applied to determine of the support and resistance? Okay, in fact, since the creation of the golden ratio, it has been widely used in various fields. In fields of financial trading, technical analyst experts apply this law to the stock market, foreign exchange market, and futures market to discuss the high and low points of the price movement with a very large or with a very high level of accuracy. And it has been used until now. Okay? In the financial markets, after the market price has completely a period of rise and fall, the magnitude of the results, rebound or pullback, can be predicted to a certain extent. Currently, in technical analysis, the three commonly used ratio of golden ratio, they are 38.2%, 50%, and 61.8%. These are just most commonly used. Okay. As for numbers like 138.2%, 150%, and 161.8%, or even more, okay, this will not be in our topic today. Okay, so we will not discuss about these three or even others. So today, let's focus on the main point. And for the extended content, you can study if you're interested in more about this. Okay, like I mentioned, the 138.2, 150, 161.8. If you guys are interested, all this information you can find online. Okay, or if you have really interested, you can drop me a message and we can discuss about it privately. Okay. Okay, let's take a look at the chart and see how golden ratio becomes support and resistance. Okay, in this chart, you can see that the mark decline considered with a 61.8% retracement of the previous upswing. Okay, which the market supported, leading to an uptrend. Okay, however, there are two questions that need to be clarified. Firstly, can we predict in advance at the beginning of a decline that it will definitely retrace by 61.8% before starting to rise again? The answer is no. Okay, the answer is no. Secondly, what is the use of learning this if we cannot predict 100%? Correct? Well, can anything in the financial market be predicted with absolute certainty? Can anyone predict the actual price? No. Right? So the answer is also no. The significance of the golden ratio lies in high probability of retracement level, such as 38.2%, 50%, and 61.8%, providing support during an uptrend. Isn't this significant enough? Okay, being able to anticipate this level in advance has already provided us with significant help in analysis and practical trading. Okay, the second question. When I mentioned the retracement of this pullback is 61.8% of the previous upward trend, I emphasize this point because due to different trading software or different starting point for drawing lines, the 61.8% level I mentioned may sometimes appear as 38.2 on the chart. Okay, this is irrelevant as long as you understand the principle. Okay. Okay. Another example, okay, of the golden ratio becoming a pressure point, which is a resistance point. Okay. In this chart, we can see a previous downward followed by a rebound. Okay, downward followed by a rebound. The position where the rebound meets resistance happens to be at the 61.8 level of the previous decline. Once the price reaches this level, it becomes stagnant and then experience another decline. Okay, which you can see 0.618 over here. Okay, what does this analysis mean for our practical trading? This significant in practical terms is that if we participate in the earlier rebound, can we sell our stock near the 61.8% level to lock our profits? Even if there's another rebound afterwards, we will not be too concerned about it. And will it be willing to forego potential future profits? Alright? Meaning, what if there's a rebound? It's okay. We lock our profits over here. Correct? We lock our profit. It go down. So, I have a strategic mindset to share with everyone here. When engaging in practical trading, we should not always aim to buy at the lowest point and sell at the highest point. It is not realistic. Okay? Even we sell it at here, we also will earn the money. Okay? Perhaps one or twice, okay, sometimes due to luck, you might sell it at the highest point. It is not definitely not feasible to buy at the lowest point and sell at the highest point every time. Okay? We just need to secure a portion of the market with certainty and maintain stability in long term. Compounding gains over and over, even if it's a little lesser each time, will ultimately accumulate into a remarkable profit. Every day, bit by bit, as long run, it will become a big profit. Okay? Okay. As for this graph, okay, I will mark this downward segment. This downward segment happens to drop to around 38.2%, okay, of the previous upward trend, where it's supported by the market and then intimates a new round of upward movement. Okay, you can see 0.382. Okay, it's over here. So, one thing to note is that under normal circumstances, if the retracement during an upward trend is only around 38.2%, then this kind of retracement is usually considered quite strong. So, why is it so? Because the market is not willing to drop too much. Okay? The market doesn't willing to drop too much. Since the market is not willing to drop too much, it indicates that as long as the price retraces slightly, it is supported by the market buying pressure. So, at the same time, it is also indicates that more buying funds are waiting to buy on the dip. Okay? So, things to take note when using the golden section or golden ratio. After all this discussion, are there any specific points to be aware of when using the golden ratio to determine the support and resistance? Yes, definitely. Because there is no method in the world that can achieve 100% accuracy in the financial market. Okay, we need more practical experience to further improve our success rate. Okay, if there's 100% accuracy, then everyone will use it. Okay, so when using the golden ratio, we need to pay attention to the two following points. Number one, whether it's a rebound or a pullback, the amplitude is most commonly at 38.2%, 50%, and the 61.8% level. Okay, but it is important to note that this number fluctuate, and none of them are fixed. Okay, all these will fluctuate. It will never be fixed. Okay, so you got to practice. Pay precise attention. Okay, for point number 2, pay precise attention to selecting the starting point of the first rise or fall. Okay, which must be the high or low points of the wave. Okay, so that's the end of my live sharing class for today. Okay, thank you very much for joining my class and giving me your full support. We will continue our live class on this coming Tuesday, 1st February 2024 at 8 p.m. I hope to see everyone here, and thank you once again, and have a great night.